back to the Hemlane Hustle, where we break down the biggest moves in real estate with the people making them happen. Today, we're unlocking the secret weapon for savvy investors, the 1031 exchange. It's the ultimate tax hack that lets you swap investment properties and build wealth faster. Our guest, Jeff Bemis, is the co founder of 1031 Specialists, and he's a master of the game. With a background that includes stints at Ernst & Young and managing billions at a hedge fund, Jeff's got the kind of real estate chops that make the rest of us feel like we're playing with Monopoly. Growing up in sunny Newport Beach and armed with a degree from USC, Jeff is on a mission to make 1031 exchanges more accessible for real estate investors. Whether you're a seasoned investor or just getting started, Jeff's here to give you the inside scoop on how to level up your game. Let's dive in. Welcome to the show, Jeff.
Oh, thanks for having me. It's a pleasure to be here.
Great. Well, I want to start with just your background in real estate because obviously you were at a hedge fund, and
Yeah.
I've never heard of a story of someone going from a hedge fund to a qualified intermediary. So tell me about that. What was the impetus of moving on over, and tell us a little bit more about your journey?
I'd be glad to. And first and foremost, this is it's really great to be here and talk 1031 exchanges. But yeah, it's sort of an interesting journey in my career. Growing up, my father's a tax attorney, my brother's a tax attorney, been in and around, the world there. And my dad encouraged me to go. I didn't know what I wanted to do when I was going into college. He encouraged me to get into accounting, which I did. And so I started my career as a CPA after I graduated at Ernst & Young. I did that very successfully for a number of years, but I wanted to do something in finance and, basically become an investor. Private equity was sort of the goal. I started working for an advisory firm, working on small and middle market private equity, investment roll-ups, et cetera. And then I worked at, I started a job working, investing in debt, equity, young growth stage investments, but also a big portfolio of real estate at a hedge fund. And so I worked there for 15 years. It was a really great experience. As you mentioned, I managed a very large portfolio near the end of my stint in that business. But truthfully, I wanted to work with clients. I wanted to be more hands-on. The things I was working on were very large, and I wanted to truthfully build a business where I was interacting with clients and customers individually and create something that I thought would have an impact. And it's sort of coming back full circle to similar to what my dad was doing. So how I got here was a little bit unusual. I did not know that building a qualified intermediary, which we can talk about what that is in a sec, but I was working on a very large real estate project after I decided that I was going to leave and do something different for, I'll call phase 2 of my career. I was working on this very large real estate idea and project, and it included a component of it was interacting and interfacing with qualified intermediaries. And what a qualified intermediary is, just for background, is in a real estate transaction, if you sell an investment property and you have a taxable gain, you can reinvest that money into a different investment property, which we can go into some of the details of this, but you can reinvest that and not pay any taxes on the gains that you have. You can roll the entire balance over. And to do that, it's like any other real estate transaction, but you must use a qualified intermediary as mandated by the IRS. So we are a service provider to clients who are looking to do 1031 exchanges. And that's sort of I'll call it the colloquial term for that kind of transaction where you sell one investment property. And again, it can be any kind of investment property: land, single family home, multifamily. It could be an industrial complex. It could be a motel. So any of those transactions, all are eligible. And this project was involving qualified intermediaries that I was working on. And what I realized is the industry, it just hadn't had any dynamic use of technology, really simple and easy marketing and educational materials. 1 in 6 transactions is a 1031 exchange. So just if anybody's thinking, oh, is this just for not a regular way thing? It's 1 in 6. And truthfully, it should be more like 1 in 2 if I were to say what fits most people's portfolios and the need for liquidity and the benefits. The benefits are massive, and people have been using it for a very long time to build family wealth. And we can talk about how they do that and sort of hand it down to their next generation and really set everybody up. But point is that I was working with a lot of qualified intermediaries in this project, and I just realized that we could build something that was very different, fresh, and interact with clients, educate clients, and be something that was very different than what we thought was out there. And it sort of tickled me to go help clients individually again. And so I did this with, I have a partner, his name is Jonathan Hilly, who is an amazing, accomplished person himself. And so several years ago, we embarked on doing that. And now we've built a team and a business. And I'm happy to say that it's going great. And I'm getting a lot of satisfaction out of the work we're doing and helping people achieve this tax deferral that really is helping them build tons of wealth for them and their family.
I love it, Jeff. So many questions for you. My first
Okay.
question is based on there's always this cost assessment of things. And what I mean by that is like if you're doing a self-directed IRA, right? There's like a certain amount you need in that IRA to make it make sense because you have to pay the custodian a certain amount of money in order to actually be able to say, yeah, I'm saving a lot more based on the
Yeah.
taxes, right? And so in this, it's like if I'm going to 1031, let's just say I have a duplex.
Yeah.
And
Perfect.
I'm going to go ahead and do a 1031 and now I'm going to buy a fourplex. Like how much money would you have to say from a tax perspective you're deferring in order to say it makes sense to pay the qualified intermediary to do this? Like is it for everyone? How do you think about that? And is there some sort of calculation that tells you like, hey, I'm going to sell this property, buy another rental property, or does in 100% of every single one of those cases, does it make sense to go?
Well, here's the good news. Lot to unpack there, but here's the good news is that it is not very expensive to go execute a 1031 exchange. Okay, a 1030 when you sell doing a 1031 exchange is just like doing any other real estate transaction, other than you need to include a qualified intermediary in the transaction, and you need to do a bunch of documents in combination with us as part of the transaction in order to get the deferral. But in truth, it's the same as any other transaction, and our fee is extremely modest. Okay, so for what is a traditional, I'll call it this. Most exchanges are what are called a forward exchange. So you sell your property that you own, the proceeds of that transaction. So what do we do before I get into the sizing so that it's worth it? But what do we do exactly in the transaction? When you sell, we do 3 things as a qualified intermediary. Number 1, we help them, we educate and advise clients as to what they need to do and how they need to orchestrate the transaction in order to receive the tax deferral. When we prepare all the documents of that are required as part of any filings that are necessary and any of the particulars, so that to the extent that anything needs to get done, we prepare and handle all of that. And then the last thing is to get a 1031 exchange, you can't take constructive receipt of the funds. So when you sell your property, this is meant to be an exchange, the money will come to the intermediary, which is 1031 specialist or someone else who is a qualified intermediary.
Mm-hmm.
We will hold those funds. And when you buy the replacement property, we will use the funds that we hold in a qualified escrow account. We can't move them without your permission. And we can talk about all the safety, the safeguards and safety that we put in place to make sure that that there's your funds are safe and secure. But when you have a replacement property to buy, you go buy that property we use the funds that we're holding with you. You authorize to disperse for the replacement property, and it's done. So our fees for a type of forward exchange are $1,200. Okay, so it is very modest to do that. And so it's
I I mean,
what
is
are
it
the
always
side?
$1,200 per any transaction, or if it's a bigger transaction, does it cost more?
No, $1,200. Okay,
Always.
so and then yeah, so it's a for us it's the same work if it's a very large transaction and a very small transaction.
Okay.
And so the funds we'll hold the funds, and then when it's time for you to buy, we relinquish the funds, and you can buy it. So to put in perspective, how does that make it economic? Number one, it's how much is your gain is really what you're deferring. So if you don't have any gain on a real estate transaction, there's no need for a 1031 exchange. Okay, so just to make sure
Yeah.
everybody's clear on that, right? So you have to sell this for, but a gain, pardon me, just to be clear, a gain, most people who own real estate are depreciating the property and taking the benefit of the fact that there's depreciation to offset some of their rental income and other income they may have separate from that piece of real estate, depending on your situation as a real estate investor. So if you are depreciating your property, that is lowering your basis. So if I invest in $1 million property, just for simple math, and I sell that and I depreciate it $200,000, now my basis, it's called, but my cost basis is $800,000.
Mm-hmm.
If I sell this property now for 1.2 million, I have a $400,000 gain in that property that exists. So that in the entirety of that gain, and there's no limit on the size of the gain or the size of the property. That gain can be deferred and rolled entirely into a new, different property. It can be in any other state. It can be any other property type. It can even be oil and gas. It can be really anything that's real property, by and large, qualifies is under the a like kind is what the IRS defines it as, but that definition is very broad. So bringing it back to the sizing, okay, as you said, is it worth it to me if I have $100,000 in equity in a property? If your basis is really low, then absolutely yes, it is worth it. And here's the other good thing: if you want to call us about it and talk about it, we talk to clients all the time. And if you want to embark on a 1031 exchange and you decide not to exchange, you just are going to sell and just monetize it and pay the tax, we'll give your fee back. Like, so we're not here for people who don't exchange. We don't keep the fee. So it's really, we try and make it as easy to say yes to embark on this, because there's not much downside, truthfully, Dana, to entertain it. The one thing you cannot do, just so that your listeners know, is if you sell the property, you truly transfer the interest, and you haven't involved your qualified intermediary yet, and we aren't there at the settlement of the transaction, you will not be able to 1031 exchange. So you can enter into contracts, you can embark on this entire process, but there's very seasoned real estate professionals that make this mistake sometimes because they don't focus on it, and then they're at the end. So just one thing to make sure is before you do the transaction, just give us a call, right? So or someone like us a call and just talk it through. As far as thinking about calculations, and then I'll stop talking here. But we also offer an Excel spreadsheet calculator that you can use, and you can use with your CPA or anyone else. You can customize it for your personal tax situation. And we don't do it as a web form because everything we've built and created is how people want to use it, and they want to customize things in Excel. But this is what we think is the best calculator in the business to help you work through what are the taxes I'm dealing with. Because keep in mind, particularly if you're in a high tax state, you will have federal tax, you'll have state tax, you'll have depreciation recapture, most likely if you're a real estate owner, and you may have net investment income tax. The taxes you may pay could be 40% of that gain. And so paying a few $1,000s versus even if you have a gain of $100,000, it compounds dramatically, and you get so much benefit out of rolling and getting the yield off of those incremental savings that it's worth it.
Let's talk about what you mentioned about what I can roll it into. So let's just say I go back to my duplex. Can I go buy a 50-unit apartment complex from that and use a 1031, or where are the limitations on it that anyone should be mindful of?
Yeah, I mean, you need to buy it. I would think about it this way for simplicity. It needs to be an investment property for another investment property, and it needs to be of like kind. But that definition is massive, and in a lot of our materials that we have, we show the breadth that can cover. But basically, it can be most real estate that's real property can be swapped into. So that's, can I go from a duplex into land? Yes. Can I go into much bigger properties? Yes. Can I go into motels, industrial? Can I go into Airbnbs? Can I get, all of these are a yes. So you can swap into, and can you go into other states? Can you go into other areas? Yes. So you can move around the country. Has to be in the United States. So all of that is available. You can, to get the full tax deferral, you do need to buy a property of, you need to reinvest the net selling price. So if after my fees for the real estate transaction, I have $1 million property and I net $950,000 for the real estate, I need to reinvest all 950, and I need to reinvest all the equity I have as well. And so most people will borrow the balance. So they had a mortgage, you just do a new mortgage for the new property, but you can always go bigger. Okay. And many do. I'd say most transactions are that way. And then there's also other options that really popular, and a lot of our clients are doing, is for folks, either they have reasons in their personal life or from a portfolio perspective, they're active. They have this duplex you're talking about. My mother has had a handful of homes that she's owned in her life and dealing with renters herself. I mean, she's been down that rabbit hole, and it can be tough sometimes, and then you find those great tenants, you're like, oh, this is great. I knew this was a great idea, but a lot of people want to get more passive, right? Professional management, professional property management, and you can do that as well. So, if you sell your property, say your duplex, there are options where you can go buy fractional interests in real estate that are, so-called tenant in common structures. So you own a fractional piece of a broader piece of real estate. So I sell my duplex and I sell my $1 million duplex. I go reinvest $1 million into a $70 million large apartment complex with other, with other investors. So you can do that as well. There's also things called Delaware Statutory Trusts, called DSTs, that offer that same benefit, where you can buy a fractional interest in a very large property. So the options are big, and you can accomplish a lot of different things from portfolio rotation. A lot of inherited land is happening these days, just as the big baby boom generation is starting to have assets turn over to their heirs. That is non-yielding assets, but there's a lot of value to others who are developers or the like. Move it into a yielding property of whatever fits what and suits where you are in your investment portfolio goals and where you are in your life, etc.
Let's talk about rates and the optimism from the Fed. And why I bring this up is I have to think 1031s are really low when there's not a lot of transactions being done. And we've had a lull in the past, 2023, 2024 here, with where interest rates are and property values still being high and having to reset. What do you think is happening? Obviously, you're tracking that quite closely with 1031 specialists. Tell me a bit more.
Well, yeah. So the rate environment is having a dramatic impact on real estate volumes in general. So I would say that absolutely, depending on the property type, 1031 exchanges are done in investment property. So a very large amount of those are in commercial real estate. But again, just, we have lots of clients doing single family home rentals. They're swapping Airbnbs, et cetera. So it runs the full breadth. But the rate environment moving up as fast as it has from where we were a couple years ago, depending on the property type, your real estate transactions are down 40 to 70% in volume. So it has moved the volume environment down dramatically. And, that it's just, people needed to rewrite, there's a lot of readjustment that goes on how people think about real estate valuation once your borrowing costs go up by 3 or 4%, as you borrow to purchase properties. What does the yield need to look like? It has a big dramatic effect on the volume because people are having to readjust in real time. So that has been a big adjustment. As far as 1031 exchanges go, I would say it's actually more resilient than the overall market. And the reason being is that there's a lot of frictional turnover that happens for people who want to rotate what assets they hold and why, and what yield profile they're looking for, what active to passive management, inherited real estate, amongst a bunch of other reasons. And so that continues to mean that there's more 1031 volume than I would say overall, but it generally speaking, Dana, as you would suspect, by and large mirrors the overall market, but I'd say it's slightly better than you would see in overall volumes.
Great. Gotcha. There's a lot of companies out there that do 1031 exchanges, right? What makes you guys different, and what should someone looking to make an exchange and change property for like property on the investment side, what should they be looking for?
Well, it's what makes us different is, I mean, everything. The guiding light of a northern star of our business is customer service. So you call us anytime. We always have this promise: call our main number, and you can call us whenever you feel you need to, and someone will pick up. Like, that is a promise we make. Obviously that's a big promise, but that is the promise we make, and we do it. So we have an entire system and setup on how we put that together. We've built a best-in-class team here that has decades and decades of experience. I mean, between all the folks at 1031 specialists, you're talking about 100 years of experience in commercial real estate and real estate transactions. And ultimately, how we do things, and where my background has been moving the kind of money I have. I mean, how we handle your money and deal in your money is best in class, at the forefront of how we think about safety and security. We're massively transparent. Everything about what we do is easy to understand, and the like. So it's a very consultative approach. All of the things we do are best in class, best practices. And quite frankly, if you have something really complicated that we can't handle, we have a big network now of folks that we bring in to make sure that first and foremost, the client achieves the tax deferment and gets the help they need. But truthfully, like, I'm really proud of what we built. So that's why you should use us. Obviously, see the other options and see what you say there. And then what was the second part of your question? You had a two-parter there, Dana. Sorry about that.
Oh, no problem. Yeah, just what makes you guys different, and then also I think just anything interesting
Oh,
you want to tell listeners as well. Yeah.
yeah. Okay. So what are people swapping into? I think there's some interesting things happening and will continue. So I'm going to caveat this big time with the fractional interest you can buy when you go from active to passive. I think that's a very interesting solution for a lot of people who own real estate. There's the point where you're really active in it. And again, my mother literally just did this. So this is coming from personal experience of her portfolio. But moving from, if you're self property managing, some people are at retirement, as my mom was. She does not want to, there's a lot of labor intensity and active things that need to be done in order to satisfy a tenant's needs. So moving into those fractional interests, you'll have professional management and a sponsor driven acquisition. So the way that works is, I sell my duplex, that same example. We want to rotate into something passive. There's a real estate investment firm that is all they do, and generally are pretty large. Many of these folks who I think are the best are managing billions in real estate now, and offer properties that they're buying. They make them available to investors who are rotating out of a 1031 sale. So I'm selling my duplex. I realize my $1 million in our example, and they have properties and options that they are doing right now, that they've invested in, and they're making available for investors to come alongside with them. Now, there's fees that are going to be a part of that, right? So if you go to a passive, you're going to pay them a property management fee. There's going to be additional fees on the way in, and there's going to be an asset management fee and the like. And you'll need to read the documents in grave detail. There are certainly people who can help educate you if you want to explore those options that I think are fantastic and in helping think about it. But if you get behind a great real estate investment firm and a sponsor who's doing that, and you evaluate a property that fits your needs, I think those are really great transactions that our customers are doing, because I think it's really important to have a portfolio that accomplishes the goals, not just the yield or the appreciation, but also the volatility of that portfolio. How much active management does it need from you individually? And what are you trying to do in your life? And do all those things come together? Paying the tax, to rotate out of your real estate because you don't want to actively manage it anymore, and paying the tax, particularly if you've depreciated a property way down, that is a massive hit. I mean, the amount of yield give up that you're giving because you paid a tax versus what you would if you want to just go into stocks or some other bonds or something else, and you should be able to go buy a really, really low risk piece of real estate, be passive, keep the tax benefit. And one thing I'll mention, Dana, that is really important about this, you can 1031 exchange as much as you want, and keep in mind, when for real estate that I hold, I'm going to defer the taxes on my portfolio, and then when that time comes and I am no longer with us, and my kids are going to inherit the property, you will get a step up in basis at that point on all that property. And for most people, they don't go above the estate and gift tax. So that property that you depreciated and has tons and tons of embedded gains, actually, no one ever pays the tax on that. So it becomes this really, really powerful tool. Why do real estate folks use this and not really diversify out? Is because that tax benefit is monstrous. But as far as what people are doing that's interesting, I love the idea of professional management making great, interesting properties that you couldn't do on your own available for the average person, but while still maintaining the tax benefit.
Yeah, great. Or they could just use Hemlane, and we'll make that passive for them.
I love it. Exactly.
Let's jump over to our lightning round. The biggest mistake you've made in your real estate investing career?
Well, I won't name names on this one, but I will tell you the profile of it. I'd say the biggest mistake in my real estate investing career was I was doing a very, very new and different use case in entertainment, and I underappreciated. It was a really, really great idea. In the fullness of time, it has bared out as I anticipated when I underwrote it. This is quite a long time ago, but what it turned out was to have that level of entertainment related massive project. The execution risk was very, very high. So I underappreciated how much execution was required to ramp up, lease up, and actually deliver experiences that were going to create this stay, multiple days at this sort of large project, and do all kinds of different things. And it would be sort of the hub with which you went out to do different things, and you'd come back and be there. So big entertainment style district, is sort of how I describe it. And when you have that entertainment style district, it was a very, very difficult ramp up. And it turns out that things happening way, way longer than you anticipated can be a real challenge because the cost of capital accrues the entire way. So that one was very, very difficult. And I would say that was probably the biggest mistake of my career. Is we ran into a lot of challenges with lenders. We ran into a lot of challenges with equity investors because the timeline extension was very difficult. And what did I underappreciate is, if there's a lot of execution risk in there, that needs to be built into how you orchestrate the capital structure of the investment, so that if it goes in a way that you weren't anticipating, you have the degrees of freedom to easily and successfully manage that. But yeah, that would be the toughest one of my career, and kept me up at night many a night, I can tell you.
Yeah, great. Well, sorry to hear that, but no.
Well, look, I mean, there's lots of good ones. I'll say this is a philosophy from my buy side days: is what makes a great investor is winning more than you lose, and winning more than you lose on your losers, because no one is going to be perfect. You can't predict the future. You can't know every variable. And while you try and account for them all, you cannot know what you cannot know, which is what the future will hold in every respect. So if you are if your propensity is that you make money, and when you make money, you make more than you lose, I view that as a very successful investor in general. Obviously, capital preservation inside of that is paramount. So I am when I say lose, I don't mean people will get wiped out. I more mean you kept their capital, but you didn't achieve the returns that you thought you would. So that's my perspective, sort of broadly.
Great. When are you investing next and where?
Wow. I am I am curious to see what happens. So I like many am very I think the yield dynamic is very uncertain right now of what cap rates or what yield on real estate people need to have to invest in real estate. I think there can be really great opportunities in very A+ locations that, while they still are not super yieldy, find themselves being much more yieldy than they were. So what do I mean by that? Properties that are in very, very difficult to replicate areas in small multifamily, I think, are really interesting. So think communities that maybe are near the beach or have like a very large amount of investment around them. Those really prime A grade properties. Those things have been at around 2 or 3% yield profiles for a very long time, like lower than where you can borrow. I'm curious to see if those have some more movement, particularly post the election, and some definite more upward pressure on rates in the current environment. I think those could become really interesting, and those at 4 and 5% cap rates, I think they could become very interesting. I think there's a lot of embedded rental growth that you can lean on because of the nature of the location and the nature of the build out. So those are things that I find the most interesting right now. I also think there's some really cool things in seasonal areas that get my attention that I still think that's underinvested in. So if you can, and I'm sure Hemlane can be really helpful in managing those kinds of opportunities. I love ski areas if you find the right ideas and the right complexes, but not at I'd call it all second tier, which are great mountains. There's a lot of investment happening at that second tier mountain community level that I think is really interesting. But these are sort of macro trends. It's all devil's in the details is usually my philosophy on it.
Great. And for listeners who want to know more, my understanding is you guys have an AI tool on your website. Where can listeners go to learn more about 1031s and ask questions on them?
Yeah, I'd love for people to go to our website. It's www.1031specialists, plural.com. And if you scroll to the bottom, just for everybody's benefit, there's some what we think are really great tools that exist there. That's where the calculator is. We have a math free. These are all free too, just so you know. We try to provide value to the community who's looking at our website, and maybe they think about us if they want to do a transaction. But your calculator, masterclass, we have what we call a 1031 Bible there, amongst other resources. But also, if you use our chat tool at our website, one thing you will find that we spent the last year building a very specific AI tool. And that chat will spit you out answers anytime, any day that will be extremely helpful. And ask it anything. Truthfully, we've been working with CPAs, attorneys, others to, we train it up on the entire tax code, revenue procedures, private letter rulings, and anything else surrounding guidance around 1031 exchanges. And it is an awesome tool. It doesn't replace your CPA or your attorney, but if you have questions, it is extremely accurate and very helpful. I am very knowledgeable in 1031 exchanges, and I'll put in questions that I get asked just to see what it might say in it. And oftentimes I go, oh, well, we had the same answer, but it highlighted one thing that I would have probably said. So again, it's meant to be a great tool for people to educate themselves. You can really ask it anything and use it all you like. And again, all these tools are free. So yeah, our website, www.1031specialist.com. And yeah, and if you have any questions as well, we're always happy and willing to engage and talk through any issues or opportunities that you're trying to explore.
And always answer that phone line if we call it.
You know what? I put it out there, so now the pressure's on, you know?
Perfect. Well, thanks so much, Jeff, for joining me today, and looking forward to checking out more from 1031 specialists and helping all of our listeners defer taxes.
Thanks, Dana. I appreciate it a lot.